seen a lot of stress in the last couple of years, and that has been partly because of some amount of slowdown in the economy that we saw previously. But more so, it was due to certain sectors which went through a lot of stress, particularly in the commodity sector and infrastructure. Now, I think certainly there are better days for the banking going ahead, because there are a couple of reforms which the regulator and the government has initiated. So first of all, let me tell you that there has been a big cleanup drive that happened during the last 2 quarters after the RBI changed the recognition norms for a lot of NPAs. And during this quarter, we saw restricted accounts which didn't have much of resolution viable. They went into NPA. So a lot of NPA which were sitting on the or a lot of accounts which are likely to fall into NPA in future, they all were recognized, largely were recognized during this quarter itself. And that's why we saw a large amount of slippages, and the GNPA has gone up for the entire system. Coming back to the numbers, if you talk, for the entire industry, roughly about, roughly 1,38,000 crores of incremental GNPA was added to the sector during this quarter itself. So what it has done is that, a lot of, clarity has emerged that not much has been left to be recognized. So whatever troubled assets were there, it has been recognized during this quarter, and this has led to more clarity on the balance sheet of banks. What is the future going ahead? So now recognition has been done, but a lot of assets which are recognized as NPA during this quarter or maybe previously is not certainly a bad asset or certainly a case of written up accounts. A lot of assets can be revived, a lot of assets can be sold off to better owners, and that is partly happening through the NCLT processes. But in addition to that, recently the government, Finance Ministry has proposed a new mechanism under which they intend to set up a asset management company and ARC kind of thing, where a lot of bad assets will be bought out by the entity, and the balance sheet of the banking sector will gradually get cleaned up. So how this helps is that the NPA will get away from the balance sheet of banks, and it will allow them to focus on the future growth. Having said that, there are a couple of challenges to that also, in the form of how to fund that structure, whether it is an ARC or AMC. You need fund to buy out those troubled assets. So once those set of assets are transferred to the new entity, or maybe we can call it as a bad bank also. So the government has to fund it. So possibly the money requirement for that is how the deal has to be structured in a proper way. And secondly, after being transferred, if at all it happens in the, let's say, in coming quarters, those needs to be revived. Those assets need to be revived, and then eventually has to be kind of make it functional. So then possibly it will make economically viable for the new ERP or bad bank to kind of run it in the long run. But net, if one looks at from the sector point of view, a lot of NPA recognition has happened in the last 1 year, maybe in 2 years' time, and even this particular quarter, the quarter gone by in Q4 FY18, a lot of troubled accounts got recognized. So incrementally, I believe for the entire sector, you will not see much of slippages going ahead. Even if there are slippages, it will be more from the recognized or maybe in the watch list, which is a kind of known source of accounts. So slippages from the regular account will be minimized. It will come down gradually, and credit cost, which has remained very high for the banking sector for the last 2-3 years, will gradually come down from the second half of FY19.